This is the taste of the development world. I'll run until I can't run, and I'll walk. And then I'll walk until I need to crawl. And then I'll roll if I can't crawl. And if I can't roll, I'll shout at someone to kick me until I get over that line. My experience of the market really is that nobody knows what the excuse the French. We work with housing associations and local authorities to identify the areas of where the housing waiting list is, what do we need to build, and where to. There's a huge social housing crisis out there. There's over 1.5 million people on the housing waiting list. There's over 11,000 people in temporary accommodation in Wales, over 3,000 which are children.
Oh, what a show. That's Bristol out the way. Our next stop is Birmingham on the 16th of July, then on to Manchester on the 10th of September, and we'll be finishing the year in Leeds on the 8th of October. Why would you attend the show? Well, we have multiple expert speakers, industry-leading businesses exhibiting, and ample opportunity to network with fellow developers and investors. The best thing? Tickets are free. You can book your ticket today by heading to our website, propertydevelopershow.co.uk. I look forward to seeing you there. Welcome to another episode of the Property Developer Show, the podcast. Now, today I'm joined by a very special guest, and there's not a lot of people on this planet where I look at and I think, I'm not doing enough. But Dorian is one of them individuals that really is doing a lot at such a young age, and a pipeline of 1,000 homes, currently delivering 250. Is that right?
270, but it fluctuates, yeah.
I mean, tomato,
Fluctuates, yeah.
With a combined GDV of $250 million, 250 million. I mean, where do we start, really?
Wherever you fancy, my friend. Yeah, no, thanks for having me on. As
Pleasure.
a starting point. It's great to see you again. Great to be here, and look forward to sharing my story, and hopefully the viewers will pick up some good tips from it.
Absolutely. So, I mean, I think your story is quite important to where you are today. And I'm pretty sure you were running a letting agency before you'd even said your first words. Not quite as bad as that. But I mean, we'll start with your story. What's the kind of beginning for Dorian?
Sure. So I'm quite fortunate. I was born into a family of property investors. My dad and mum had a portfolio. My dad's an old school builder, and my mum was a stay-at-home mum, and they bought properties, as my dad did, when the opportunities came up, without any business plan. They both left school with no qualifications. They're both dyslexic. They've done really well for themselves. I'm super proud of them, and I've learned a lot from them. But and I started helping my dad when I was younger, working on some of the refurbishments. I was meant to be an electrician, ended up making tea and sweeping wallpaper. Quickly realised that on-site work wasn't necessarily for me. So I started helping my mum on the management side of things, doing the books really, and learning how to manage tenants her way, which is a very, very particular way. And then I started learning how to actually do it, theoretically the correct way. Not to say that she wasn't doing it correctly, but it was just, like I said, no formal education. So learned about all the key things you need to do to let a property to tenants and manage it. And so yeah, I got exposed to property, and I developed a passion from it from a really young age. From as far as I can remember, I always said I wanted to be in property, I wanted a portfolio, I wanted to do, I suppose like most kids, I want to do what my parents do, but better, bigger. I want to outshine them, type of thing.
Yeah.
And then growing through school, I was quite entrepreneurial as well. I was always involved in trying to buy and sell things or make money. Always ended up losing money, but either way. And then going through school, I was a C student. I was more of a naughty kid, and then I turned into a good kid and finished GCSEs with all C's. But by the time I got to that age, I already knew how to manage properties because I was doing it already with my parents. So I set up a letting agency when I was 16 and scaled that into an estate agency and finance brokerage, and became qualified along the way. So I'm a qualified letting agent, qualified estate agent, qualified finance broker. I also did accountancy on the side because I wanted to understand the numbers of business. I'm a numbers-based guy. I'm more of a finance, like I said, guy rather than an on hands. If you give me something to build, like this here, it'll either be wonky or it'll break as soon as you touch it. Whereas my brother and my dad, they can build a house from scratch. They're just gifted in that way. And that's kind of how I got started, how I developed my passion for property. It's been with me ever since, even in all the bad times, down times. And I think that's the biggest thing, is if you can get into something you just love, you'll do regardless of the money, then that's what carries you through the difficult times. And then obviously from there, I started working with investors, started raising money, started doing my own projects. It was originally building my own portfolio, doing private sales, and then I pivoted the entire model into forward sold social and affordable housing, which we'll probably come on to in a bit.
Absolutely. I think we'll jump straight into that part now, if that's all right. So in terms of going from, the smaller projects into the social housing side, which you're doing now, the size of Castell, how many have you got in the team?
So we have 70 at the moment, and that's because we have Castell Group, and we manage our own construction, and I have 2 subsidiaries under it. We manage our own groundworks, and we manage our own M&E as well, or elements for a few of our sites.
And M&E for people?
Sorry, mechanical and then electrical. So, but that's only for a few sites. But those subsidiaries have a lot of staff in them. They're more people hungry, if that makes sense. Whereas a construction management company, actually, if I take a step, as a developer, you don't need many staff to scale a very large development company. There's some large development companies doing student accommodation, working with the main contractor, that really there's only a handful of them in the team, and they're doing hundreds of millions of pounds. If you go into construction, though, that's where all the staff is. Construction management, you need a team of QSs, technical managers, site managers, all that sort of stuff. And then if you actually want to do the work, like groundworks, you need loads more staff. You need the actual foreman, you need the supervisors, and it's just layers on layers. So that's how the system kind of works, and different, how lean you can be. I started off actually as a developer, just myself, working with the main contractor. Then I went into construction management and started managing all the trades, and obviously the team grew. Then I went into groundworks because we were doing a lot of it and it was becoming risky. And then the team grew, and same with M&E. So now we're about 70.
So you kind of, are you doing groundworks for other people and M&E with, obviously, for people that maybe don't know what M&E is, obviously it's all the electrical sides that sort of go into a project and making sure that the light switch.
Plumbing, electrical, ventilation, solar, all that type of stuff. And we don't do it for anybody else. We're a land-led developer first, so we scale our own pipeline. Like how the current model works for Castell Group, just if I just introduce Castell Group, we're a social and affordable partnerships house building company. We work with housing associations and local authorities to identify the areas across Wales at the moment, but hopefully national, of where the housing waiting list is, what do we need to build, and where to. Our land team will go then and find those opportunities. We're a brownfield specialist, which means we focus on sites that have had some form of development previously. We will then find that opportunity and take it back to the client and say, look, we found this site. It matches your criteria. Do you want it? And if they may say no, yes, or, we need to change what type of units you've got on it, whatever. We will then secure the site and we will take it through the planning process ourselves. We do all the pre-construction, pre-development stuff, working in collaboration with the client. Once we've got planning and all the legal consents, they will buy the site off us and simultaneously give us a build contract, which we've already negotiated at that early stage. Then we're in the construction phase and we will build the site for them, and they will pay us on a monthly basis or fortnightly basis, depends what we've got agreed, all the way through to completion, and they own it. It's theirs. So we're a developer and construction company. That makes sense?
Absolutely. Yeah. So essentially you've got the development side, but as well you're sort of delivering development on behalf of local authority.
Yeah, definitely. Yeah. And there's a huge social housing crisis out there. There's over 1.5 million people on the housing waiting list. There's over 11,000 people on the emergency temporary accommodation in Wales, over 3,000 which are children. And I've met some of these families. I've met some of these people. We're very small still. We've only built couple of hundred homes. We're only building 270 homes, but the problem is massive, and it's getting worse. So there's a huge gap in the market, I say, but it has its own challenges, which we'll probably talk about later. But coming back to the team, we have at the moment, we're delivering all of that and the construction of it, and we operate all across Wales. And like I said, where we want to go is we want to be handing over 300 to 500 homes a year across Wales. And then we want to scale into other areas as well and try to keep helping tackle this issue.
Absolutely. So in terms of you as an individual, obviously having what you've got or building the business that you've managed to build at 29 years old is really impressive. I mean, it's phenomenal. You as an individual, what skill sets have you got that has made that possible?
Yeah, so I think, like I said, when I was going through school, I was always trying to make money, but I was a C student. And then kind of when I left school and started studying accountancy, I became a mega nerd. I was really interested in it. Anything I'm interested in, I become hyper focused on, and I want to learn about it as much as possible. And I become a sponge. So by the time I was a late teenager, I already knew in quite some detail and depth how to find a property, how to refurbish it, how to let it, how to manage it, how to finance it on both the acquisition and the refinance side, how to sell it if I needed to. I knew all of that already and had qualifications in it. So I just think personally, my skill sets, I am very, very passionate and interested about what I'm doing. I love what I do, and I would do it for free, obviously, if I could. And I think that's a big part of it. I know people say that, and I'll be honest with you, when I first was in business, kind of like when I was really young, I just wanted to be a billionaire. I've always been big thinking, and rightly or wrongly, I've always looked at big companies and just reverse engineered them. Like if Amazon started as a bookshop. I'm not comparing us to Amazon, but I'm just saying the PLC house builders. I've done a lot of research about where they started from, and they've all got humble beginnings, and they've all had different circumstances to let them scale. But really, I just break things down and like, it is achievable if X, Y, and Z happens. So then in my mind, I'm like, well, that means in theory, there's theory there that we can do that. And that's one of my skill sets, I would say, is I'm a visionary leader. I would set high expectations, high goals. When I employ people, I have a meeting with them and I say, this is the vision. This is what we're trying to do. There's a social housing. This is the issue, like in terms of the deficit, and this is what we can do about it. And they want to get on board to a story then. And this is your role. This is why it's so important. Can you do it? Do you want to do it? So the good side for me in terms of skill sets is that I'm a big thinker. I'm very proactive. I'm very driven. I still like to think, though, that I'm a humble person. I hopefully, if you ask around, everybody gets on with me. I'm a friendly person. I don't think I'm above anybody. In fact, I constantly seek out my weaknesses and make it known, publicly what I'm not good at. And like you credited me, for example, for the success, but it's not my success. It's, I don't know how to build a house. I've got a team of people who are way more experienced and qualified than me at doing so. One of my other skill sets, which is important for any business owner, is once you've got that strategy in place, it's getting the right people around you and being open enough to allow them to share their wisdom with you, and test it, and then run with it and give them the praise for it. And that's what I do. Have an idea, bring the right people forward, try it, test it. If it works, scale it. If it doesn't work, go back into that cycle and repeat again. Kind of like the lean startup,
Yeah.
So but now I am a mega nerd. So I've done a lot of studying and training now in business and other things, all property related. And I just love it. I'm still doing it. Even as I'm speaking to you now, I've currently got applications out for an executive MBA at, business schools and stuff. I just want to keep learning. I want to keep doing more.
Nice. Yeah. I can tell. I can see the passion oozing from you.
Yeah, I get a bit passionate. I should say emotional. I didn't mean not emotional.
Well, don't cry in this podcast.
No, I know. I just want to build. Sorry.
Brilliant. So in terms of, I suppose, the challenging side then, what sort of challenges have you faced to go from scaling up to where you were at currently?
Oh, tons of challenges. Oh my God, yeah. God, I can write a whole book on challenges today. And I think I'm not comparing myself either to Elon Musk, but he does say it right. It's like scaling a business can be like, eating glass and staring into the abyss. Yeah. And sometimes I read articles about like these upstart companies that they've went from zero to deca millions, and they've been profitable all the way, and they've never raised any money, and and everything just looks glossy. And I lean back and like, the fuck, right? Like, how? You know what I mean? Because for me, and I genuinely have this conversation with myself, I went into a bit of stoicism. I think it's the only thing that kept me sane for a period of time. Because when I set my business up, every business I've set it up from scratch. And startup businesses are solid. There's a big hype and talk about mergers and acquisitions, which I do agree. Like acquiring a company, versus a startup, it can be a lot easier in some respects because a startup is solid. You've got what I did it, I had bootstrapped it. So I had no resource, no financial resource, no leads. And I had to start it all from scratch. And getting that snowball momentum takes a lot of energy and a lot of time. And I could do it because I was young. And then obviously what happens is you're not experienced in the sector, you're not experienced in the business. So every decision you make, you don't know whether it's good or bad. And for me, most of the time it ended up being bad, right?
Yeah.
So like I went on scale, I'll give you a few examples. I went into business with the wrong people to start with. All right. My biggest downfall, so my strengths I talked about earlier, is that I'm a visionary, I'm passionate, and that means typically the opposite, it becomes your weakness. I'm so easy to sell to myself. I see the good in people and I see the good in an idea. You pitch me any idea and I'll just look at the positives of it. You're like, well, it's a multi-billion pound industry. Like, if we do this, we could capture this part of the market. Like, oh my God, you could really make an impact here. Ignoring all of the problems in it, right? That's just what I'm like, which is a risk as you scale. Anyway, I'm diverging. My problem is I set it up. I scaled too quickly. So I went into business with the wrong people. I raised the wrong type of money. I secured the wrong deals. I negotiated the wrong terms. I put, the figures were incorrect. All of these you learn from. It's okay making a mistake if you take the lesson and learn from it and readjust your criteria and you go again from it. If you've got the capital to outlive those mistakes, you'll eventually make it. But a lot of businesses fail because they make mistakes and they don't have enough capital to go again. Yeah. That's where the problem comes. So a lot of the challenges with that, and then of course you have the uncontrollables. So we traded through COVID, and we also traded through high inflation. Our model is great in that we are working with government grade clients. We forward sell and we are forward funded. The downside is we have to enter into fixed price contracts. So if our figures are correct and our assumptions are correct, great. But if anything changes, we take that risk, and nobody could foresee that construction costs went up 40% in a space from 2021 to 2023. And a lot of our jobs, got hammered. Welsh government stepped in and tried to give some funds and stuff, but there's so many companies that have gone under and are still struggling today. And because you have that problem, margins going down, companies going under, what happens is the market pulls the life cord out. So insurers pulled out the market, funders pulled out the market, and you can't trade through those positions if you don't have the reserves and no funders aren't coming in. I've got on my phone now 10 different lenders that are still all saying that they're not looking to support the construction sector. We get classed as construction because we do the construction. There's such a lack of appetite for it because of the news and stuff. And then what you're doing is you're constantly asking yourself, is this actually going to work? And you keep modeling things. I'm going on in here a second, but this is a taste of the development world. We then dealing with planning permission. When COVID came, planning doubled, nearly tripled in time in terms of how long it takes to get permissions. Our average time to get from offer accepted to start on site is nearly 2 years because we're full planning. That is so hard to cash flow because we have to invest in that. Nobody wants to fund it either because it's deemed as too risky. And you end up boxed right in this market where the negative is that you can't control inflation, you can't control planning, you can only try to de-risk things, and there's no funding support or a lack of funding support. And then what that creates is a really high barrier to entry. Comes back to business theory, Porter's 5 forces. When you've got a really high barrier to entry, there's a lack of competition that comes in. The lack of competition comes in, it means there's a lack of supply being generated. And that gives you a double-edged sword. The good about that is that we become really in demand. So if we can manage to find a way to take all of those negatives and challenges, and I'm giving you an insight now of how my brain works to keep me through these challenges. I've been constantly trying to refine our model and fight our way through and how we're structured to take those challenges, those negatives, and turn them into opportunities. Because if we can ride that and structure our business model around it, then we're in such high demand, and there's still a high barrier to entry. The competitors struggle to get in. They struggle to get in because they've got to go through all that learning curve. They've got to take all that risk. Most of the people who start the process bail because they're like, why would I do that? It doesn't work unless you've got scale. So yeah, that's, I completely rambled there, but that gives you a bit of an insight.
Absolutely. It's all great stuff. So in terms of, I suppose, the season that the business is in at the moment, be it, whether it's summer, winter, where are you at the moment? If you traded through that tricky period, you're out the other side now, what sort of, are you looking to batten down the hatches a little bit, or just sort of deliver on what you've got? Where you're at the moment?
So yeah, we carried on scaling through all those challenges. We were, I think, the fastest growing company in our sector in Wales for 2 years in a row. And
congratulations.
Thanks. But this is, so again, that is a choice that within a year, maybe a year from now, people are either going to look back and say that was a genius move, because we're one of the few that in our what we do, not necessarily just construction and tendering. We don't really do that, but how we do it, our partnerships model in our area. We were one of the few that just purely like double down, triple down, and carried on scaling through it. And it's either a genius move because now we've got a strong pipeline, forward sold order book, so to speak, and we're becoming known as an authority in what we do. But in it, like any business, if it doesn't work, and obviously I've got no intention of it not working, but if it doesn't work, then that decision would be pinned as the reason why it failed. And businesses, all the business books I've read and the stories I've listened to, it all comes down to those moments. You're on a tightrope or a knife edge. And if the decision works, you get out of it, you break the cycle, you explode, you're great, and that's exactly the same as us. If it doesn't work, people pin that decision as the reason of your downfall, which is exactly, this is exactly the same. So in terms of where we're at, we're currently, in terms of our target, we're on track for our target. We're on track for our target for number of handovers, for our size of our pipeline, for our turnover, and our margin. Every job we've done since 2023, every home we've built has returned back to our minimum margin target. And, and that's good. We've still got 2 challenging jobs to hand over, but they're at the back end now. So we've traded through it.
Nice, amazing. I love the sort of knife edge element to what you just said there. I think it's so true. Like one way you're a genius and a millionaire, the next way you're bankrupt and you've got to start again. But I suppose the objective is to make more than you lose in the long term. And I think what you've learned with Castell Group, is that the English way of saying it?
Castell is the double L. Means castle in Welsh.
Okay, right. I'll leave the Welshman to
to
say
in
it
England,
properly.
Everyone just says Castell.
Apologies.
Yeah, so like, why is it 2 L's in? Yeah.
Just very quickly interrupting this episode. Have you got a property deal in mind? Want to build or grow your portfolio but unsure how to obtain funding? No problem. At Roma Finance, they love to lend. The borrower-first approach means Roma deliver flexible, tailored solutions that accommodate the diverse needs and experience of developers across residential and commercial projects. With a flexible criteria, Roma take time to understand each borrower's unique circumstances. Roma's attentive team are always equipped to handle and take on your requests. They will guide and support you throughout the property journey. Colleagues and customer relations are the beating heart of their business. Don't forget to explore Roma's website, romafinance.co.uk, for helpful resources, including articles and case studies to guide your financial decisions. Remember, Roma Finance love to lend. Your property goals are only a call or email away. Now back to the episode. But I mean, what you've learned there, you'll never not have that in your arsenal to start another. You'll have the contacts, the know-how, the information. And I think even when you're taking that risk, you probably know in your mind, worst case scenario is, it doesn't work out the way we want it to, but within 12 months, I'm going again.
Yeah, I think, and I get what you're saying. My brain doesn't really ever think that it's not going to work. I have the utmost confidence in it working. I see the theory behind it. it's just a little bit of time and like I call it the if that. This is always. I went to a talk once by the founders of Leon, the restaurant, and they said that they kept looking at their forecast, and it was red, and it kept saying it was going to be green, in the next 3 months, and every month that went by, that would shift again. So a month comes, but instead of it being 2 months, now it's still 3 months. Kept going down until the day that it didn't. And it finally caught up. And it's exactly the same with us. I know the fundamentals behind the business model, and I know the theory, and I know what we've got, and I know the number side of it. And that, because of my level of, knowledge in a way, without sounding big-headed about it, my brain doesn't say that it's not going to work. It's like any business won't work if you strip cash out of it, or if you you can break any business down to its fundamental working capital cycle and its key risks and assumptions. And like I just came from a business now that I met, a business owner that I met, and I was having a chat with him, and I asked all these questions just instinctively. And I worked out very quickly that his working capital cycle has an issue in the stock bit and the debtors, how it's structured, in that he has to fund the WIP and he doesn't get paid until he delivers the project. But if you do that on scale, the bigger you grow, your cash gets absorbed, right? And unless you manage to got funding lines, you'll go out of business. Not because the business isn't good, it's because you run out of cash. And that's, in my head, I know that it'll work. Mm-hmm. And I won't give up until it works. I'll run until I can't run, and I'll walk. And then I'll walk until I need to crawl. And then I'll roll if I can't crawl. And if I can't roll, I'll shout at someone to fucking kick me, like a basketball, until I get over that line.
I love that. So where do you think that comes from? Is it delusion? Is it
delusion?
Yeah. I think you've got to have some delusion though, haven't you, to do what you're doing? Do you know what I reckon it is? I don't know why. Obviously there's a book called Grit, and I've read it, and it's just all about a successful trait is that, I study a lot about companies that go under as well. And when I peel back the layer of it going under, I say to myself, you could have carried on there. There was, and I think for me personally, and I think anybody listening to this that wants to get into business, this is where the skill of broadening your business knowledge comes from, and also finance and accounting as well. Because once you understand numbers, and once you understand how to raise finance, and I did corporate finance as well, so I understood how businesses raise money and all the different suites and stuff. And when you understand that, you really can see how far you can take a business, what you can do to really get over the line. And what it comes down to is a lot of businesses fail because the founders choose not to, they lose faith in it. Mm-hmm. They choose not to do it anymore because the next step is that they have to now put more risk on the line. Mm-hmm. They have to sign their house up. They have to PG stuff that they didn't have to. And then when push comes to shove, they've lost faith in it. And that's fine. Not every business is going to work, but I haven't lost faith. And I think that's where it comes from, is that if I was looking at all the fundamentals and I was like, there's like for example, back to the high inflation period. If where we are at now, let's just say we was going gung-ho and everything was great. We're building 270 homes. We're in contract for, nearly £100 million worth of either live or immediately to be live development sites. It's a lot, and a pipeline behind that. If costs started blowing up 40%, I honestly don't think we'd be able to trade out of it. And I would lose faith in that business model at that moment in time. Yeah. And I just think I'm a logical, finance-backed person, and I just assess it. Mm-hmm. And if it's telling me that it's okay, but you just need a bit of capital because you've got to bridge this time horizon, that's fine. Yeah. That's business. Yeah. That's what business is. And then if it's telling me you're fucked, then I'm like, okay, we need to sort that out now. Absolutely. I call it burn the boats mentality. You ever heard that? That story?
Yeah. It was
That's my approach. And I think that probably leans on what you're saying there. Even if there's a 51% chance this will be successful, that 1% is all you need to commit to the idea.
I kind of like, and I get what you're saying. And I'm a big reader as well. And I like Sun Tzu, Art of War. And one bit in that is all about knowing your enemy and assessing your enemy. And most wars are won at pre-battle stage, at the preparation stage. And the enemy there's another book called Only the Paranoid Survive. The enemy is yourself, right? Is that the business landscape is what it is, yeah? And your business fundamentals, like I said, once you understand what they are what they are. Your debtors are they are, your receivables are what they are, stock is what it is. You've got to move those dials yourself as a business owner to get it into line to match the strategy you need. And part of the Art of War, Sun Tzu, what it says is, after the research stage, if your enemy is stronger than you, don't fight him or them. If you're stronger than your enemy, and when it means stronger, it's not just saying physical strength, it means on balance, after you've assessed everything, are they still stronger? Which means you can sign yourself up to a death, basically. But then if you are stronger, then you fight. And that's kind of my mentality. Mm-hmm. It's like, one of the biggest things that I operate, and I recommend this to anybody, is whatever I do, my brain always goes to the worst case scenario. What's the worst case scenario? I'm sizing up the enemy and if I'm stronger. And if I can live with the worst case scenario, I feel like I'm stronger, especially if the upside is better. And then I don't really think about it anymore. I just go in. If the downside is too big, it's like, I would only make that decision if I didn't really have a choice. Mm-hmm. If it was I have to bet the house here because I don't have any other choice. But I wouldn't willingly make that decision. Does that make sense?
Yeah, absolutely. So, the approach is a logical, intelligent decision with a small amount of delusion, in the sense of the downside doesn't even enter my mind because of the percentage chances are in my favor.
Yeah. Like it comes in my mind, but then straight away my brain is like, I already know my worst case where I'm at. Yeah. I'm like, and it comes back to if that, and if that again, it's like it's hard. But yeah, I would agree with your summary. There's definitely delusion in there, and there's definitely the want. You've got to really want it. If anybody's listening to this and they manage to set a business up that's cash flow positive, that scales really well, and I'm on about now in the tens of millions, or even in the millions. Sorry, I didn't mean to sound whatever that word is there. It's still a very impressive business, and you don't have to raise external capital, and you don't have to go through all that. Then I take my hat off, because that is absolutely phenomenal and excellent and great. I actually don't wish the types of business struggles that I've had or have endured on anyone, really. I don't class it as a good quality of life or something that you should choose to want. I wouldn't choose to want this, but I honestly mean it this way. I genuinely think I'm just wired this way. My wife says it as well. Some of the stuff I've had to deal with and the pressure moments, they're like, even some of my staff that have had to leave because of the stress sometimes of when it got. They're like, how do you do it? And I'm like, I don't know. I can just deal with it. I just know because of the approach that I've developed. And I think I'm just wired that way.
I think resilience is the most unspoken thing in entrepreneurship, property. I think resilience is the difference between success and not being successful, and that ability to just keep going in the face of whether the odds are stacked against you, and having that resilience to inflation's gone up 50%, can't raise money, contractors are walking off site, everyone else around me is going bankrupt, but we're still going, and even all of that still going on, but that having the resilience to turn up every day with a smile on your face, pretending that everything is fine on the
Sometimes
surface.
It's not a smile, man. But yeah, I agree. And I look around, and the bigger you get, the bigger your impact. If I just throw in a towel when I don't have to, I have staff that are going to be impacted. Their families are going to be impacted. I have a supply chain that's going to be impacted. I have stakeholders that are going to be impacted. There's the housing waiting list that I'm talking about. That's going to be impacted because of delays, and it's going to affect everybody else because of funders again. It's the whole. Actually, when you weigh up the downside, I'm like, all right, I put myself in this position because I'm striving for this, and this is the price you pay. Yeah. But when it comes over the other side and we become successful and cash rich and all that sort of stuff, there's probably going to be people who are like, yeah, you're just lucky or whatever. I know. I can look in the mirror and be like, it's because I didn't give up.
Yeah, yeah.
I know it.
Absolutely. So looking back, do you feel like you've sort of gone through the levels to get to where you are now?
Yeah.
What's that in hindsight? What's that process been like for you?
Yeah, sometimes I just say to myself, like, whoever is listening, I'm not necessarily religious, but I'm just like, sometimes I talk to myself, I'm like, surely I've given enough now, you know? Surely. I'm like, fuck, man. You know, they talk about business owners having to sacrifice. All the business books I've read, you've got to sacrifice. You've got to commit to it. And I'm like, I've done that now on spades. I'm confident enough. I can go toe to toe with anybody and I can say what I've sacrificed. All friends, relationships, family life, children lifetime, you know, personal wealth. I've put everything on the table and more. You know, I've given enough, so I deserve it back, you know? And I say that to myself and that keeps me going as well. But, yeah, did that answer your question? What did you ask me again? I started going on a speech then.
What's it been like to go? What the process of going through the levels of success?
All right, yeah. So success is fun because you know, as an entrepreneur, when you set out really, really ambitious and really excited, and everything's great. And you spend a lot of time at the early stage on stuff that you shouldn't spend a lot of time on. Like you obsess about your website, you obsess about your image, you obsess about your business cards. You're like, at Network Invest, you see my business cards, you know, they're like platinum and like round and stuff. And you're like, yeah, but have you sold anything? Not yet, you know. Do you think I should change my business card? Like, fuck the business cards a second, right? And that's so, but that is a typical startup entrepreneur. They get really excited about these things. And then reality hits when they go then to start pitching to make a sale and they get their first rejections. Mm-hmm. Like I scaled my letting agency from cold calling. So I dealt with rejection really early on. And I tell you what, it's probably one of the best things that happen because you just get like, you get a bit thick in the skin. Mm-hmm. And what I've seen is a lot of entrepreneurs will give up at the time where they just can't get a sale in. And to be that is fine as well because it comes back down to like there's a business framework that I say to people when you set out. Firstly, to set a business up, you should really understand why you're doing it, what your why is, what your dream is. You know, for me personally, I want to make the biggest positive impact I can. I want to scale my business in a positive environment. So like building social housing is one of those. And I want to exit at one point in the future. And I want to be taking all that personal wealth and I want to roll it into a fund. I want to be the principal of my own fund, private equity or M&A fund that specializes in the built environment because I love the built environment. Mm-hmm. Property, construction or traditional businesses and prop tech and construction tech. And I want to be able to do that with experienced and knowledgeable people around and continue the ethos of just making a positive impact and carving out some personal wealth, protecting it. So because the risks I take, I want to get to a stage where it's not going to bring everything down. Mm-hmm. You know, my family's still protected. But then 99% of my wealth is going straight back in. It's the reinvestment mode. It's because I do what I love to do. But anyway, business framework, start with your dream. Why? You've really got to have a strong why. It will carry you through the dark times. But then this is where it gets really important. You could do this fast and with limited money. Validate. You gotta validate your business model. Is it even a business model? Do people want to buy what it is you want to do? You've probably come across some businesses that they tell you what it is, and you're like, I'd never buy that in my life. Do you know what I mean? Or equally, they'll tell you the business. You're like, yeah, but there's like 5,000 of you that I know of. You know what I mean? Like so is validate the business model. Then actually understand the fundamentals of the business model, like how many competitors are there? Is there a market for it? Who will your customers be? How are you going to be different? Is it genuinely a gap in the market? Then build something really cheap and effective just to get it out the door to try to get a sale. And only scale a business and start building infrastructure behind it when you can sell, when you've proven that people want to buy what it is you want to do. Mm. Other than that, my opinion, you're wasting time. And they don't do that. They flip it and go too optimistic. So, sorry, that's how my business journey started out like that, then got hit with rejection, then kept going, and then my whole mentality started building around that. Yeah, I don't know if I answered your question here, but
I think so, yeah. I mean, in terms of like where you started, it was all about getting the first sale. Obviously now it's the level that you're at. It's not about the sale, it's about who is going to make the sale. within the team, I presume, given the structure of the business and how many you've got in the team. That was a simplified version of what I was trying to describe there. Obviously, it's not that simple. But so from, I guess, that kind of letting agency days to starting Castell Group.
Like you've got a lisp.
Castell. Right. We'll go with that. Yeah. I'll just call it
just
Castell.
Say Castell.
Yeah. I'm English, I'm afraid. So yeah, going from letting agency to Castell Group, and then has that all been sort of an organic process, or has there been, in a sense of that's an opportunity, I'm going to chase it? Were there multiple opportunities that you were chasing before?
Shiny penny syndrome.
A little bit like that, yeah.
Oh yeah, I was a big victim of the shiny penny syndrome, but it's okay because I was young enough and I loved it. And when I set the letting agency up, what happened is obviously your client are landlords and you want to let their property and manage it. Your two main revenue streams. Some landlords want to sell their property, not rent it. They're fed up. So at that point, I was like, well, I can do that. I had no idea how to do that, but I didn't tell them that.
Yeah.
And that's how the estate agency was born out. I didn't want to give away the lead. And I learned how to do it, and obviously made tons of mistakes whilst doing it. And then clearly, when you're working with buyers who want to buy the property, they would always talk about needing finance because they don't have cash to buy it. So I was like, that sounds interesting. I can do that. Again, didn't realize it was a highly regulated industry. Mm-hmm. But become qualified in it, did all that, and started doing that for people as well. Making a lot of money, actually. There's a lot of money in finance, believe it or not. I think when I was young, I know I'm still young now, I mean, but like 10 years ago, I was making like 200 grand a year, like in finance. I was like, for me back then, that was a lot of money. And my biggest problem was that I left it too soon because I wasn't really interested in finance. I was doing it because it was serving the businesses, but this is a problem, especially when I was younger. I was jumping from business. I didn't let the business get to a certain level, mature it, systemize it, bring in a team, which is the other half of scaling a business. I would scale it up with my enthusiasm and my ability to get leads in and get sales in and prove the business model. That's what I was constantly doing. And then as soon as it was up, I would leave like junior staff. My management and leadership was diabolical, especially when I was young. And I would set the next business up where my strength is. It's like, that's where my strength is. And then so that would fall to an issue. So I sold the letting agency, closed down the estate agency, stopped doing finance whilst I was scaling my property portfolio. I'm like, no, this is what I'm doing. I was raising hundreds of thousands and then millions of pounds from investors. Didn't want to bother with finance anymore. I was doing deals. I was buying my own properties. I was doing refurb refinances, buy refurbished refinance. I was doing flips. I was doing commercial conversions. And, that's what I was excited about. And then I couldn't sell a development, which was a problem because I was fully exposed to a development finance lender, fully exposed to an investor, did all the hard work, couldn't sell the development. It was a speculative development. Only by luck of the market, I managed to sell. But what it made me realize is I could go out of business here because of the market. And then I flipped the model into forward sold.
Where did that actually, so in terms of figuring that out, was that just purely by contact? Someone else was doing it? Like how did that even come into the forefront of you? This is an option. Yeah, so
I did a lot of social housing in the letting agency. And by the time I got into developments, I heard of social housing developments, etc. like that. Yeah. But then I was doing some site tours, and one of the site tours I went on, it was a social housing development site tour, and it was for a housing association local. And I was like, I do have some contacts. So I started speaking to them, like, yeah, this is what we do. Had no idea about the industry. And then obviously I managed to get around some professionals, and I started asking them questions. And then I started picking up the phone and having conversations myself. And I just learned by asking questions and getting myself around people, and I'm like that now. If I don't know something, I will openly say, what does that mean? Or can you? Well, I don't know what that is, because that's the best way to learn. And normally, when people have the answer, they actually like telling you the answer. It's kind of like human nature. It's people like being right.
Yeah.
It just is what it is. It's psychology. And that's how I learned it. And then what we did is once I come back to that, one of the housing associations I spoke to was like, what are you looking for? What area? And when I found a site, it was kind of like, rang them up, got this. Is this what you're looking for? And then slowly but surely learned the steps by doing. So it's an inefficient way of doing it, though. I would say that. Like in hindsight, every business I've set up and everything I've gone into, I've done it a really hard way.
But do you think that without those lessons, do you really think you'd be able to make the decisions that you've made to get to where you are?
No, not for me now. Because everything I've done has been such a hard way, I've had to learn granular detail level of every business model and seen firsthand catastrophic mistakes and small mistakes. And
do you think that's the process, though? Even in hindsight, probably easy for you to say to someone, "Oh, you should do it this way," but for them to actually listen to that information and actually process it in the way that you process it, do you think that's still the process that people?
In some things, but like in property development, you shouldn't do the way I did it.
Right.
It's way too risky, especially if you've got assets already or a family or stuff to lose. Like people, it amazes me sometimes. People get into this sector and they're very optimistic about doing multi-million-pound deals and taking PGs in the hundreds of thousands of pounds. And they are not weighing up the risks as they should be. And sometimes they're doing it with fucking limited information. So it depends. Jeff Bezos, Amazon, says it best when he assesses opportunities with two different doors. Can I come back through that door? I kind of said it earlier with the worst case scenario. If I can come back through that door the same way I come in, then he doesn't really, you can mess about really with it. If you go through that door and you can't come back, he needs to make sure that decision is the right decision. And that's what I would say with people. If you've got enough resource and the deal on the table or the business opportunity you want to get into, if it goes south, I'm going to lose 10 grand here. I can lose 10 grand. Then you don't have to go to the nth degree. If you're going to sign a £2 million property development, you've never done it before, and you've got to go joint and severally liable on a PG for £500,000, and you don't have £500,000 of assets, or that's all of your assets, you got to make sure that what you're doing, you can get out of, right? And the best way to do that is by getting around other people and getting them involved that have done it before, because they will point out 90% of the key mistakes. They're not going to point out everything. You're still going to make mistakes, but the mistakes that you're going to make shouldn't be the shirt off your back mistakes. If that makes sense?
Yeah. I mean, we've covered so much today, but in terms of, I suppose, rounding the episode off, what's your kind of opinion on the market at the moment? Where do you sort of see it going in the next 12 months, 18 months?
My experience of the market really is that nobody knows what the fuck they're on about. Excuse the French. It's like, I thought everything was great when I started doubling down on decisions.
Yeah.
Inflation came in. You just like hyperinflation in construction. And pre-COVID, you thought everything was great. COVID comes in. And then obviously there was a problem. And then actually it boomed because of the money influx. But then people started paying for that. So it's a good question because nobody knows. The question really people should be asking is, how robust is my business model?
That was my next question. What are you doing to prepare for these changes, or a change, let's say?
And it comes back down to being paranoid, because you can stress any business model, kills it. Like for us, you could literally say our business model, the government could write into policy tomorrow, I'm oversimplifying it, but let's just say they could, that they are not spending any more money on social housing because they got to divert all efforts towards a war. Do you know what I mean? That's what happened in the World War, basically.
Yeah.
In theory, it could happen again. If you do that to our business model today, I don't have a business anymore, basically. I have to pivot into something. And that's how extreme you could take it. And the problem you got, and this is where it comes back down to being a risk taker, business owner with calculated decisions, you could stress anything and become what's called, you could enter into analysis paralysis. You know, you could do anything and you'd be like, oh, it's too risky. Oh, what if this happens? And you'll never be able to de-risk that because you can't. So what you got to do is be like, you know, what's the probability here? And you don't even know what the probability is. So really it's yourself thinking, how optimistic am I this can happen? And when you take somebody like me, who is an optimistic person, that's dangerous. So you got to get around other people and say, right, here's where I think the risks are. This is what I think about it. Again, try to get around experienced people. What do you think the risks are in my business model? Where do you think, you know, the mitigation measures I put in place against the risks? Do you think that's acceptable? Do you think I'm missing any risks? So I would say the key bit to anybody is do some research to figure out how robust your business model is with what if scenarios. What if interest rates go up again? What if inflation goes up? You know, just what if? Try to put some answers against yourself. Then make sure whatever business you're in, you get around experienced people who've been there before and or are still doing it, and get them to, you know, review it and give their advice, whether it's a paid non-executive director, whether it's a mentor, whether it's just somebody who's already in the business and willing to give you some of their time. But one caveat, I'm not sorry to go on, but it is important. What I've witnessed with that firsthand is still, you've got to take the advice they give you and you've got to reframe it. And what I mean by that is somebody who's exited their business that has a lot to lose, kind of like what I just said live just then, the advice I would give people is completely different to how I did it, right? Because I've been through and I wouldn't want to go through it again. It's because my bias is coming out. So when you're taking advice from somebody, you've got to always ask yourselves, what angle are they giving that advice from? Are they giving that advice from the angle of a wealthy individual who doesn't want to lose money anymore? Because that mentality versus an upstart entrepreneur who's got nothing to lose is completely different. Yeah. So just I'll leave on that.
No, I like it. Brilliant. Amazing. So if people want to get in touch, how can they go about doing that?
Google me.
Yeah.
Google
simple,
me.
yeah. Fair enough. You're on LinkedIn, Instagram?
Yeah.
All that.
It'll come up on Google though.
Okay.
But yeah, if you want to.
First article, Crime Watch.
Yeah. Google me. First answer, do not deal with this man.
Yeah, Welshman wanted.
I know. My LinkedIn is at Dorian Payne Property. Company is Castell Group, www.castellgroup.co.uk. And anything else, literally Google me.
Super. I appreciate you coming on today and making the trip to Liverpool.
Pleasure.
Good stuff. Thanks, Dorian.
Thanks.
Well, what an episode. A lot to unpick there. Some really great lessons from Dorian. As I always say on every episode, please do like and subscribe and do leave a review on the audio version. It helps us get amazing guests like Dorian today. We'll see you again soon. Take care. All the best. Bye-bye.